In this week's episode of the Stock Scores Market Minutes, I'm going to talk about the recent stock market correction and why they can be profitable, in fact, very profitable. I'll also do my regular weekly market analysis and look at the trade of the week on VXX. All right, before we get started with this week's topic, I want to talk about the upcoming events area of the stockscores.com website. I do live webinars from time to time, an opportunity to ask me questions and really provide some content that is current for that particular moment. If you would like to see what upcoming events are there, just go to the Stock Scores website and click on Trader Training, go down to upcoming events, and there you can see the different events that are coming. Now, some are events limited to people who have taken a certain membership level at Stock Scores and will have a fee. Most of them are free events, so you can see here we've got how to become a successful day trader and some other topics, and those are all there in the upcoming events area. Just click on register online and you can go through the step-by-step process to get registered. Once registered, you will also be receiving any follow-up to that particular webinar. I usually record these webinars, and so you can get that recording when I have sent it out. All right, let's get into this week's topic, stock market corrections, why they can be profitable. This past week, we had a real significant sell-off for North America, well, really world stocks. The biggest down day was on Wednesday, and it was also the most profitable day for my day trading strategy in the last 8 months. It was extremely lucrative, and that leaves many people asking, well, how can big down days be profitable? Well, let me begin by showing you the chart of my day trading strategy performance. So this particular chart adds up the performance each day in reward for risk terms. So in other words, if you risk $100 and make $200, you've earned a reward for risk of 2. I accumulate that reward for risk for every trade that meets the rules of my strategy each day. That's all computer driven. I have an algorithm that figures that out. And then I plot that on this chart. And you can see in this particular case that generally it's fairly linear upward trend, but in the last week we had a real strong spike higher. And if you go back to March, we also had a real strong spike higher. Well, of course, this past week was a big corrective week. And if you look back on the chart of the S&P 500 going back to the third week of March, you will see that there was also a sizable correction back then. So that is what I mean when I say they are very lucrative and profitable. The question is, why is that? Well, corrections tend to be very strong and steep. There's a saying in trading that stocks take the elevator up, or pardon me, the stairs up and the elevator down. In other words, markets go down much more quickly than they go up. And this is because emotions, namely fear and panic, are high, and that creates opportunity. Because those trends are very sharp and short in duration, you just get very big moves in a short amount of time. And if you have a strategy that puts you on the right side of a correction, you can make a lot of money. My day trading strategy, whether I'm going long or short, has the same rules, but it definitely makes the most when there is that sharp sell-off that comes with corrections. And so what I want to say is love corrections. They're not bad as long as you are on the right side of them. All right, let's get into this week's market analysis, starting us off with the US markets as always. And here you can see the big sell-off that we had this past week. The market had been in this sort of narrow range, and we broke down. Actually, the previous week started to move lower and then had a couple days of pause here. And then on Wednesday, the big week open, and that sent the market sharply lower, followed up with by more selling pressure on Thursday, and then a little bit of a bounce back on Friday. And that puts this market, I would say, heavily oversold, but still gripped by fear, and that means caution is warranted. Now, looking at the longer term chart, and we always want to take a look at that long-term trend line, let's see if that trend line was broken. Well, I can draw my line across those bottoms, and you'll see that we actually went below the trend line during the week, but we managed to come back with that little bit of a comeback on Friday to close above that long-term upward trend line. So that means that this is still a bull market It is one where prices are right at the trend line, so caution is warranted because we could get a breakdown through the trend line. But for now, that hasn't happened. We've simply taken out some of the emotion in the market. That's a good thing. It recharges buyer interest. It makes people more apt to buy in the future, and it cleans out a lot of the weak hands who might have sold in the future. They're now out of the market, and that's often a good way for the upward trend to recharge. So as long as this upward trend line isn't broken, I think you remain optimistic about stocks. Now we see this weakness also in the Russell 2000, which of course is the small cap market. But here I've got the daily chart, and you can actually see that the daily upward trend line was broken. The weekly not so much, but this parabolic downward move shows just the emotion that's in that market, in the small cap market. So heavily oversold, due for a bounce back, but it'll take a bit of time for confidence to come back. When you get these sell-offs like this, you'll go through a process of basing and then starting to move higher again. It doesn't happen overnight. Very rarely do we see V bottoms. Instead, we see a bottom, a break of the downward trend, some sideways action, and then it starts to move up from there. So the market is going to have to go into repair mode from the recent selling pressure. Onto the Canadian market, similar situation, sharp sell-off in Canada as well. But in Canada, you haven't had that same strength that the US markets have had this year. The Canadian market's been sort of sideways to weak, but it still suffered from the selling pressure and really didn't bounce back with as much enthusiasm on Friday. And so you have to remain bearish in the short term on the Canadian market. Now, looking at the longer term picture, you can see that longer term upward trend line has been broken, but we're really still in this sideways range. So this isn't as bad as it looks when you see that trend line break. I think the market is just going to gyrate in this sideways range. There you can see the weakness at the start of the year, and we're just coming back to test those lows. I think we go down a little farther in Canada before we hit that low point where we'll see a bounce back. But certainly the market stuck in that sideways range, and not a lot of interest in Canadian stocks given, relatively low commodity prices outside of oil. And in Canada, oil prices don't have the same amount of benefit because of transportation concerns. The economy is, I would say, stable, but not great. You've got maybe overextended housing markets in some of the big centers like Vancouver and Toronto. Just a lot of things weighing on the Canadian market, and you can see that in the chart of the TSX. Moving along to the TSX Venture, and I talked earlier about how markets take some time to reverse from weakness. Well, here's the downward trend in the TSX Venture. We broke the trend there, that's step one. Then the second step is you build a rising bottom. We had that step two, but what we haven't yet had is a break up from a rising bottom, which is step three. In fact, instead, the market has rolled over and started to move lower again. Perhaps it's going to test those lows. So this is not yet a market that I would be enthusiastic about buying. It is trying, but it hasn't succeeded in breaking up from the rising bottom as I like to see. All right, let's take a quick look at currencies. US dollar has been relatively strong the past 3 weeks as US interest rates have risen. But this week, US interest rates actually fell a little bit just as the US dollar hit that resistance level from 2 months ago. Pretty normal course of events. I would say the US dollar destined to go sideways near term, perhaps pull back a little more next week, but doesn't look like it is breaking its long-term upward trend, but also doesn't look like it wants to resume that upward trend anytime soon. Onto the Canadian dollar, which is trying to break its downward trend, but so far it has failed to do so. It is essentially oversold. Here you can see oversold, comes back to the trend line, oversold, comes back to the trend line, oversold, and has now worked back up to the trend line. Until we can break the downward trend line with a move up through it, don't get too optimistic about the Canadian dollar. What is encouraging, which we haven't seen in past times, is that we are actually building some rising bottoms there. And that is a sign that optimism is starting to come back for the Canadian dollar, but it's not there yet. And I think it will take a little bit of time still for that trend line to be broken. On to interest rates, which is really the big concern for stocks coming into this week. We had that move up through 3% on the 20-year Treasury. And you can see here on the chart of the Treasuries ETF that we broke down through support, not this past week, but the week prior. This week we actually stabilized a little bit. I think we see the bond market move up a little bit in the weeks ahead, but not necessarily breaking the pessimism that has been underway for a little while. So we could get a little bit of support for stocks by interest rates falling, which would mean this is going up. Of course, bond prices go up. That means interest rates go down. So look for bond prices to maybe move up a little bit for the next week or two. Then I fear that we could see them roll over and continue the negative chart pattern that occurred with that breakdown through support. On to commodities. First up, gold, which had a good week because of the turmoil in stocks. You can see that little downward trend line broken from, call it a double bottom. We've got a little bit of a rising bottom there. So that's encouraging for gold. Got a little bit of strength there as well. Still, it's a crowded chart. You know, this gold price has been sort of stuck in this sideways range for a number of years. I think we could see gold prices move a little higher near term, but it's got a long way to go before it can break through that horizontal resistance. And so this looks to me like more of a tradable rally for the active trader. Maybe a swing trader can trade these gold stocks on the long side in the next little while. But I wouldn't get too enthusiastic about building longer term positions in gold just yet. On to oil, which, as I said last week, was on the little bit on the overbought side. We were at the top of the channel. We had hit the top of the channel, and that means profit, or pardon me, selling pressure comes in, a little bit of profit taking. We saw that this week. I think we've moved down to test the lower boundary of that channel, so it wouldn't surprise me if next week oil prices are lower. But we haven't broken the upward trend line, which is intact. We just continue to build rising bottoms. That means the buyers are in control. Optimism is in place. And so remain a long-term bull on oil until that upward trend line is broken. So my ratings then, I've lowered my short-term rating on US stocks to bearish, but they are quite oversold and due for a bounce back. I think we see that next week, but still it's a risky market. And so my longer-term rating is neutral. Canadian stocks neutral long-term, bearish short-term as well. Gold neutral on both time frames now. I've upped my rating a little bit there because of that break of trend. Oil remains bullish long-term, but neutral short-term, as it does appear to be going through some profit taking. That sharp sell-off in stocks last week has them oversold and at strong support. So look for a bounce back next week, but buy with any buying you do should be with caution as the long-term upward trend is being tested. Gold has broken its downward trend, but it still has work to do to turn around, and oil pulling back in that long-term upward trend. All right, let's take a look at the trade of the week. And this is something that I encourage people to look to trade when there is turmoil in the market. You don't necessarily have to short stocks when there's a correction. There's lots of ways to make money by buying things that go up when the market goes down. And this is one such thing. This is the VIX, the VXX ETF, symbol VXX. There's a few varieties of this. There's also TVIX, UVXY. They are leveraged versions of this one. This one is not leveraged. Here you had a abnormal break, which came when the market began its correction. You had a breakout from a pennant pattern, and look at the spike in volume and the spike in price at that moment. That's the action candle indicator that I use for many of my strategies, where you have abnormal price, abnormal volume, and the VIX went for quite a tear. You can see it ran away from the trend line, pulled back, ran away from the trend line, pulled back, really went parabolic here. And I've taught in this video before that when you have a parabolic trend, you want to be very cautious about holding, and certainly selling up here when the parabolic trend was broken was a wise thing to do. We rallied back a little bit again on Friday, but rolled over into the end of the day. I think now we're building some falling tops. In short term, I wouldn't be too excited about being long of the VXX until it can break a downward trend. But what I want to demonstrate with this chart is just how much these things can move when there is a correction. In this particular case, from the entry point around about $30 to topping out, close to $39 just 2 days later, not even 2 days later. That's a 30% move, and that's a great way to make money from a correction. Well, that has been the Stock Scores Market Minutes. Hopefully you've enjoyed it. Please click on that like button. Subscribe to the channel if you want email updates when I send out a new video, and I will be posting a number of new videos in the weeks ahead. Click on that little alarm button. That's the only way to get alerts now. Otherwise, YouTube will not inform you when I upload a new video. Have a great week in the market and trade well.